The cryptocurrency market is incredibly dynamic and ever-changing. New trends and developments can emerge at any moment, and we must be willing to adapt our strategies accordingly. Keeping up with the latest news, staying informed, and continuously learning and growing is essential to success in this field. So, that concludes our discussion on cryptocurrency technical analysis. I hope you found this video informative and valuable in your cryptocurrency investing journey. Remember to stay vigilant, stay informed, and always keep learning. Thanks for watching, and I'll see you in the next video. Let's dive right into the world of cryptocurrency fundamental analysis. This powerful approach helps investors make informed decisions by examining a project's underlying value and potential. In a rapidly evolving market like crypto, fundamental analysis is essential for identifying promising investments and avoiding potential pitfalls. The importance of fundamental analysis in cryptocurrency investing cannot be overstated. By examining factors such as market capitalization, adoption rates, and development progress, you can separate the signal from the noise and identify projects with real potential. Remember, in the world of crypto, knowledge is power, and fundamental analysis equips you with the tools needed to make strategic investment decisions. Diving into key indicators for fundamental analysis, let's start with market capitalization and price history. Market cap reflects the total value of a cryptocurrency, calculated by multiplying its current price by circulating supply. Analyzing market cap can help you gauge a project's size and potential growth. Additionally, examining a coin's price history can provide insights into its past performance and trends. Next, we have adoption rates and user growth. A project's success depends on its ability to attract users and gain adoption. Track metrics like wallet addresses, transaction volume, and network activity to measure a project's growth and potential. Now, let's discuss development progress and community engagement. A strong, active development team is crucial for a project's success. Monitor GitHub repositories, social media channels, and community forums to assess a project's development activity and community engagement. A dedicated community can contribute valuable insights and help propel a project forward. Moving on to the regulatory and legal environment. Regulatory changes and legal developments can have a significant impact on a cryptocurrency's success. Stay informed about local and global regulations, as well as any legal challenges that may affect a project's growth. Lastly, we have competitor analysis and industry trends. Understanding a project's competition and its position within the industry can help you make informed investment decisions. Analyze competing projects, their market share, and any emerging trends that may impact the project's future prospects. First up, we have white paper and roadmap analysis. The white paper is a project's blueprint, outlining its purpose, technology, token economics, and more. A thorough analysis of the white paper can help you understand the project's goals and potential. Additionally, evaluate the project's roadmap to assess its development plans and progress over time. Next is team and leadership evaluation. A strong team with relevant expertise and experience is crucial for a project's success. Look for a diverse group with backgrounds in blockchain, finance, marketing, and other relevant fields. Also, consider the team's track record and any previous successful projects they may have worked on. Now let's talk about partnerships and integrations. Solid partnerships with established businesses and organizations can help a project gain credibility, resources, and exposure. Examine the project's current partnerships and how they contribute to its overall goals and growth. Next, we have token economics and circulation. Token economics involves the supply, distribution, and utility of a cryptocurrency. Understand the project's tokenomics, including its total supply, emission rate, and token use cases. Analyze the token circulation to ensure a fair and transparent distribution. Lastly, consider real-world use cases and practical applications. A project with a clear, viable use case is more likely to succeed and gain adoption. Evaluate the project's potential to solve real-world problems and its ability to compete with existing solutions in the market. First up, long-term investing. This strategy focuses on selecting solid projects that have strong fundamentals and holding onto them for an extended period. The idea is to ride the wave of growth and benefit from the compound interest effect. By focusing on projects with solid foundations, we can minimize the impact of short-term market fluctuations and, ultimately, reap the rewards of long-term growth. Remember, it's not about timing the market, it's about time in the market. Next, let's talk about value investing. In the crypto space, value investing means identifying undervalued projects that have strong fundamentals but have not yet gained mainstream attention. The goal is to invest in these projects before they take off, and then hold on as they appreciate in value. This requires thorough research, including evaluating market cap, price history, adoption rates, and more. It's all about finding those hidden gems that have the potential to skyrocket in value. Last but not least, contrarian investing. This strategy involves going against the grain and investing in projects that are currently unpopular or facing temporary setbacks. The goal here is to capitalize on market overreactions and invest in fundamentally sound projects at a discount. Remember, when others are fearful, be greedy. And when others are greedy, be fearful. Next, we're diving into the risks and limitations of fundamental analysis in cryptocurrency investing. First, we have limited historical data and market volatility. Cryptocurrencies are relatively new compared to traditional financial markets, which means we often have less historical data to analyze. This can make it challenging to identify trends and make accurate predictions. Plus, the crypto market is known for its extreme volatility, which can make it difficult to separate short-term fluctuations from long-term trends. Second, let's talk about the influence of external factors on cryptocurrency prices. Cryptocurrencies are often influenced by factors that are not directly related to their fundamentals, such as market sentiment, news events, and macroeconomic trends. This means that even if a project has strong fundamentals, it may still be subject to external pressures that can impact its price. Next up, false claims and misleading information. The crypto space, unfortunately, can be riddled with scams, false promises, and misinformation. This means that as an investor, you must be cautious when evaluating a project's claims and do your due diligence to ensure the information is accurate and reliable. When it comes to investing, relying solely on fundamental analysis can leave you vulnerable to market fluctuations and unexpected events. By incorporating technical analysis, you can gain a more comprehensive understanding of market trends and price movements. This way, you'll have a well-rounded perspective on the crypto market, helping you make better informed decisions. Now, let's dive into using fundamental and technical analysis together. Fundamental analysis helps you identify promising projects by evaluating factors like market cap, adoption rates, and development progress. On the other hand, technical analysis focuses on chart patterns, price trends, and trading indicators to forecast future price movements. So, how do you combine these two powerful tools? Start by using fundamental analysis to identify high-potential projects with strong fundamentals. Once you've narrowed down your list, turn to technical analysis to determine the best entry and exit points for your investment. By combining both methods, you can make smarter decisions about when to buy, hold, or sell your chosen cryptocurrencies. Get ready, hit that like button, and subscribe to our channel for more fantastic content. In conclusion, fundamental analysis is a crucial component of successful cryptocurrency investing. By understanding market trends, evaluating projects, and employing different strategies, you can make more informed decisions and potentially maximize your returns. But remember, the world of cryptocurrencies is ever evolving, and staying ahead of the game requires continuous learning and adaptation. Keep up with the latest news, developments, and best practices to stay informed and make the most out of your investments.